Hello, I'm Sammy Blake, Client Portfolio Manager at Empire's Optimization Desk. Welcome to our weekly market update. Temperature was again the biggest driver last week. We saw a cold weather front hit the UK and most of continental Europe. That resulted in strong rise in demand in the UK, with power and gas demand hitting levels we haven't seen in about a year. That resulted in the day-ahead power and gas contract posting gains of about 7 to 8% over the course of the week. Despite the strong rise in demand, the system coped very comfortably under what were trying conditions. We had very hefty, robust flows of gas coming from Belgium, from Netherlands, and from Norway. Combined with the fact that we were withdrawing quite a significant amount of gas from storage, there was no problem in terms of dealing with the rising demand. Getting to the latter end of the week, though, we started getting forecast of mild temperature for the back end of January. And that, coupled with the fact that the system had coped so well with the first extremely cold weather front to hit the UK, there was an element that supply in February won't be as bad. That meant that the February contract, unlike the day ahead, did end the week just marginally lower. Further along the curve, contracts were trading at the lower end of their range as they were weighed down by weaker coal and weaker carbon prices. There was an element of support, though, from stronger oil, which had pushed up on the back of positive Chinese GDP data. However, carbon was the biggest story last week. Already the market is lacking confidence in the measures the EU are proposing to take to address the oversupply in the market. So news on Friday that a planned German auction for about 4 million tons of EU permits had to be cancelled because the reserve price wasn't met was really unwelcome in the market and resulted in hefty selling of the carbon contract. As a result, the 2014 contract ended the week about 14% down to record lows of under €5. Looking ahead, the end of January is expected to be milder than seasonal average, so we do expect some volatility on near-term contracts. The cold weather front we've had so far has also meant we've actually made a dent, finally, in our storage stocks. We currently stand about 70% full, 10% short of where we were last year at the same point. So do look out for further LNG on the horizon or the price difference between the UK and the continental hubs to see what gas suppliers will be doing to replenish stock, as that would affect contracts in the near term. Further along the curve, contracts do remain attractive, as I mentioned earlier, as they are in the lower end of their range. However, the carbon storage really continues to exert bearish pressure, so really do pay attention to that. So in summary, we expect volatility on the near term due to the weather uncertainty, and the curve does look attractive. However, the bearish clouds really do linger. If you do have the right risk management tools and services in place, you should be able to manage your price risk exposure. If you have any questions, you can contact us on the email address below. Thank you for joining us this week, and hope you join us next week as well.